You're listening to the ROI channel. Hello and welcome back to the ROI channel, the channel that's obsessed with the art and science of return on investment. And I'm very excited to have a very special guest today. He's one half of the double act that is Sow and Reap Capital, Mr. Steve Mueller. How are you, sir?
I'm doing really well. Thank you, Ben. How are you?
I'm very well, thank you. Very excited to have you on the channel. We've got a great discussion in store for you guys today. Quick bit of housekeeping, guys. Anything that is said on the channel today is just our opinion. We're not financial advisors. We guarantee none of the information on the channel. So please understand none of what you hear today is advice or intended to be advice. It's just our opinion. It's just two guys that love investing and speculating. So please make sure you seek the appropriate professional opinion before taking any action. It's purely an entertainment / informational discussion today. What we're going to cover today, we're going to get Steve's input on the current macro situation. And if you don't mind, Steve, I want to delve into your thoughts on the silver market. You're known as a silver expert, so I'd be really interested to get your thoughts on where we're at in terms of the silver market. And then we're going to have our classic ROI segment where we find out, we put him to the fire and we find out what his highest ROI from investments are and what his highest convictions are moving forward. So before we begin, Steve, I'd like you to introduce yourself and just give us maybe a 2-minute overview of your background and what got you, what led to you being involved in capital markets investing.
Hi, I'm Steve. As you said, I'm part of Sow and Reap Capital, and we're just a not-for-profit advisory. And yeah, we just like talking about stuff. Capital markets. I've always kind of been interested. I read Thomas Sowell and Jim Rickards pretty young. Adam Smith. Been interested in it, but as a ministry and as a vocation, I'm a dentist, and I really like that. I like working with my hands and making broken, ugly things pretty. But now capital markets, with the lockdowns and whatever, I had a lot of extra time. I was like, okay, well, maybe I should get into capital markets a little bit. So, but I've really liked it. So, yeah.
Excellent.
Went from paper trading to kind of more actively trading.
It's so interesting. From a physiotherapy background, I've never met a dentist that wasn't a good investor. Something about you guys, you're super smart, but you have to be super practical as well because you're always working with your hands. And so what led you to start that Sow and Reap Capital, and what is it that you're looking to achieve, you and Scott? Because you guys you just put out so much amazing value. What is the end game for you guys?
I don't know. We talked about maybe running some sort of fund and actively managing other people's monies, but for right now, we're trying to make each other better. Trying to help other people along because we assume, just like your channel, that there's a lot of people looking to get ahead of all the government craziness, all the money printing, all the inflation and deflation and everything else that we have. And just any way to get a return. So I think mostly everything we're doing right now is just philanthropic, and we're donating it to Compassion International. And I see I think a food crisis coming, and so I think we'll probably just look to raise for that. Yeah.
Absolutely. Yeah. Unfortunately, I do have to agree in terms of the food prices, which we can touch on. But guys, the details to Sow and Reap Capital will be in the description. Make sure you follow those guys because they do put out an amazing amount of information and their generosity is second to none. So I do encourage viewers to get in touch with you guys and to follow along. In terms of macro commentary, what do you expect from a macro environment moving forwards? And how are you positioning your portfolio to protect and grow capital into what you expect to come over, let's say, the next 3, 5 to 10 years?
Sure. I've heard the term hyper-stagflation, kind of referring to the stagflation that we saw a little bit in the 30s and 40s in America. I definitely saw in the 70s, but just kind of more amplified with the speed of telecommunications and information. Just the volatility will be faster and more violent. And I think that's what we're seeing. There's also kind of the geopolitical realignment, as the American empire wanes. Nature hating a vacuum, I think we see, other countries assert themselves in different ways. And so probably a lot of de-dollarization, de-globalization. I think energy and food security will be major themes. And I think I think a lot of recency bias. Like, for example, we've been in a bull market for bonds for 40 years. I think a lot of people still talk about the classic 60-40 portfolio and why aren't bonds working, and
Yeah,
like,
safe to say, I think that's
murdered.
dead.
Yeah. They still don't get it. Like, a lot of these guys are still like, oh, it'll work. It's worked every other time. I'm like, yeah, well, read a book that's a little older.
Exactly. Exactly. And I think that's super important if we touch on a philanthropic point of view. I don't know what you think, but I look out and see that people just aren't ready for what could potentially be coming down the pipe. And that's super sad to see, because in order to have a free and happy and prosperous society, we obviously have a bedrock of self-defense, and that comes from energy security, from food security, and financial security. So that's why I love what you guys do, because you're helping people to put that into perspective and saying, look, we can't control everything. We can't control, to a large extent, policies. We can't control geopolitical movements, but what we can and must control our thoughts and our actions. And so that's why I really love what you guys do, because you're helping people to understand that bigger picture and getting some key take home actions that they can take to protect them and their family. In terms of positioning sector wise, like, what is your favorite sector at the moment, and why is that in terms of an investment perspective?
I think uranium, just because the fuel cycle is just, the back end is on fire. Scott went into that with your show, so I won't repeat that down. But,
he gave an epic education, that's for sure.
Yeah. The next 15 months are, I think, going to have some very strong, memorable moves. There's a lot of people that are short and don't know it. And it's going to be a fun process of price discovery for a lot of retailers, I think, too. Like, I know a lot of mom and pops. That was actually the article that came out today. The headline article was "Mom and Pop Give Up," and it was like the worst sentiment across broad equities that we've seen. I think it was like tied for 4th worst of all time or something. So, but I think a lot of retailers that did put in the work to understand the trade are going to do real well. So I'm happy to see that, even though we're way down today. So
yeah, it is obviously a cyclical downturn in what we expect to be a secular bull market. Now, for our audio only listeners, you're wearing a cap that has something written on it. What does your cap say, Steve? Tell us.
It says $500 uranium. My friend, the uranium corgi, as a pseudonym, made them for us, and so
okay, that's
that. And I expect a lot of crazy high prices on a lot of things. Like, nobody thought nickel was going to explode to the level it did, right? Rhodium several decades ago did the same thing. I think it's probably uranium's turn right now. But even like Dutch natural gas, it was $1.24, $1.25 a really short time ago. They couldn't give it away. They were looking, and oil went negative here in Oklahoma. But but 2.5 years ago, and that was just crazy. But but they take things too low and they break, and then they're going to rebound really, really high. You've stretched it down and held it down too low, and that's uranium's in that process of recovery. And I think, as we'll talk about today, silver and platinum will get there too.
Certainly. And I know Josh Young has his $250 WTI hat. You've got your $500 uranium hat. Why $500, if I might ask? I'm curious about that. Why not 400?
Several reasons, yeah. So several times now, uranium has gone 1 ounce of gold to 4 pounds of uranium. So that would be about 500. And we saw that both in the 40s and 50s. We saw that in the 70s, and then we saw that again in 2007. So I don't think 500 is really that stretch. It's mostly just for shock factor, because most people are just like, we were at $18 and there's, it's already tripled and the equities haven't responded. So anyway, yeah, it's mostly just for shock factor.
Okay, so you're using a ratio of uranium to gold, and you're expecting a reversion. Hello. We've got,
sorry, one
second. We've got a gate crasher, and you're expecting the ratio to revert to around about a 4-to-1 ratio, and that's where you get the 500. So I know Scott throws out some crazy numbers, which will be really interesting. In terms of transitioning towards the silver market,
yeah.
What is it about the silver market that gets you so excited? Like, why silver and why now? Because we've had a dearth in capex for commodities in general. And if we're honest, this uranium and silver theme has been around for a while. Correct. Uranium, I guess, has the catalyst of the Japanese fleet coming back online and spot coming onto the market. So I can see how it is different now in terms of we've got the catalyst for uranium. What about silver? What's the catalyst that is going to take silver into that silver squeeze that people are expecting?
Yeah, I think there's a record awareness of it, of what the Fed's been doing, and I think we have a lot to thank Bitcoin and for that. Like there is more awareness of sound money, and also just the fiat tomfoolery. That's a big part of it. The other thing is, like, we're seeing India buy at record levels. We're seeing China buy at record levels. Russian produces a lot normally, and they've not been able to. So I think we're seeing both the demand and supply. The biggest thing for me right now, maybe tied for the biggest, is one, it's below cost of production. And it typically only does that briefly, like just not even usually a full quarter. Like if you go back in history, it happens pretty frequently, but it's usually not, but just for a quarter. And then usually if it goes down for anything below cost of production, which we did, we went like $1 below production, there's a pretty violent upside move on the heels of that. So that's a big thing for me.
What would you suggest is the cost of production for the average producer versus the current spot price?
Right. So the average producer, if you look at just the silver focused miners, it's about 1850, and we went down to 17 something. So we went down below. The gold miners, they're between 1450 and 1550, and so they still have a bit of a cushion, but they're getting there too. But a lot of the copper miners and a lot of the zinc miners, and then also the other part of that cycle is the refinement, right? And there's been a record number of refiners going down because of the high cost of energy, and the being below the cost of production is a huge thing. But also, I think the way I look at it, that I know others do too, some that I would encourage everybody to look at is this a store of energy, right? Is it a store of work or value? It's proof of work, kind of, right? Because it took so many gallons of diesel to get this out of the ground, to refine it pure, and to have it minted or stamped or whatever. That takes a lot of energy, and that cost of energy is going up rapidly. So that's, those are the Q2 numbers. Diesel's cooled off a little bit, but starting to go back up. But, there's so many factories and so many cost of wages. There's so many inflationary pressures at some point. And so I think we probably see it go up. The other big thing where I think silver is timely, not just like, oh, someday, is the banks are long, and they're hardly ever long. That's very rare. So, and we're seeing it in the London lease rates. Like in America, a lot of people talk about the COMEX, and I don't really understand that because there's not really that many bars on the COMEX. It's really mostly in the London bank vaults, and the lease rates there are getting pretty high. And we've had all these weird, back and forth between contango and everything else. So I think we're seeing in the market the tightness and the coiling and stuff, and with like I said, that with Asia buying and investors buying as they're not getting returns on the stock market, right? So I think we see more defensive buying than speculative buying. All while we're below the cost of production and the banks are long. So I think it's probably time for a rally. And the other thing is like the sentiment. Like I post something about silver on Twitter or Reddit or Instagram. It's not supportive, right?
Which is a
If I
great
post
sign if
something
you're a
about,
contrarian
that's where
speculator.
you want to be, right? Yeah. So totally different than a couple of years ago. I'd post something about silver and like, yeah, silver to 150, yeah, to 1,000. It's just like, okay, probably should take profits.
Yeah, it's always counterintuitive. That's really interesting because in their latest quarterly report, Goering and Rosenzweig do touch on that fact that when you see the banks go long and the traders go short, historically has been the time that silver really outperforms. And from what you're saying, it sounds like we're getting very close to that point in time.
Yeah.
In addition to the fact that we're trading below cost of production. And so with a metal that we need for both industrial and monetary purposes, that can only go on for so long. I've heard the likes of Lobo Tigre, for example, talk about how he thinks that silver now trades more like an industrial metal as opposed to a monetary. And you would agree with that?
I do. I think I think it's probably silly to think that it stays that way forever. I think it comes back into money. But we're going to have to see a lot more confidence lost in the fiat system, and I think in governments in general. But the IMF and the World Economic Forum and Bank of International Settlements, they all have white papers on, hey, we're going to start moving to an electronic SDR, right? And if we go to an electronic SDR, gold and oil and maybe silver, are going to have to be, but even if it's just gold, right? And other countries' debt in some sort of balance, silver will get rediscovered as a monetary metal real quick. So it's not now, but it will be, I think, again.
And SDR for newer listeners is a special drawing right, which is the idea of it being a currency that's backed by a broad basket of either other currencies and or commodities. And it's a very a topical or very timely topic when you look at essentially what Russia has done is put themselves on a quasi gas standard. You've seen the likes of Russia and China that they're not buying treasuries the way that they used to. And the Russians, at least, have essentially been hoarding gold since 2018. And it's a really interesting time when you look at fiat currencies and what is it that gives something value? Do you just write an IOU, or eventually it comes to the point in time where you need actual physical goods to satisfy demands for daily civilization? So if uranium's going to $500 a pound, what's your best guess for silver spot price?
I think we test 50 in the next 12 months, maybe 9. I think we might actually break it just because I think there'll be some short covering. So, 60, 61, 63, kind of that area wouldn't surprise me in the next year or two. Typically you have a pretty strong rebound if you go, like I said, below cost of production like we have.
Okay.
So
And then in the longer term,
yeah.
I've heard Eric Sprott, Keith Neumeyer, and those guys say that they certainly believe that triple digits silver is possible. Are you in that camp, or where do you fall?
Yeah, and 2027 to 2030, as different currencies fail, or debt markets fail, or we reset to an ESDR and they reprice gold. Sure, I think a lot of those things, that they refer to the 1980 bubble, and it was a bubble, right? And we had trouble getting back to 50 recently. It's silly that it's as low as it is, but 100 or 1,000 or some of these other pie in the sky numbers, like, yeah, you're really just saying that the currency died, which wouldn't surprise me at all.
Mm.
I think they need to inflate away the debt and deleverage, and then that deleveraging is going to be pretty nasty. And I think people will turn to hard assets. And I think like that's the big thing, is we see a very real panic from everybody in most all nations into real assets like farmland, precious metals. I mean, cars. I think things that take labor. I think we see labor come back a lot more. We've seen financialization for the last 150 years, and bonds for the last 40 get just ridiculous values. And I think the real economy and labor start to claw some of that back. So
Very interesting. And in terms of
yeah.
ways of investing or playing this theme, how are you playing the theme? Are you going with straight bullion? Are you looking at producers, developers, explorers? Let me pick your brain a little bit on each of
Sure.
those before we delve into the next segment.
Yeah, I'm in really just one producer, Fortuna Silver Mines. The management's been really good. The share price has been terrible.
Yes,
We've
I
gone
do
from
happen
like
to hold. I do
10 to
happen to hold some
$2.
shares. It hasn't been a fun ride
Yeah,
so far.
they've done really fantastic as far as doing M&A and getting their mines going in several jurisdictions that are pretty difficult. Argentina and Peru and Mexico and the Ivory Coast, I think. Venezuela, it's the Ivory Coast. So like, and they've mostly been in gold, but they have their eye on several silver deposits for more M&A. And I don't know if they'll buy anything else, because right now they're not getting rewarded for it. But um, as far as producers, I like those. Developers don't. I have some Silvercrest. I went in probably about half of the money I wanted to silver. I wanted to go to bullion, and the other half I kind of put into a basket of miners. Did a lot of Silvercrest and Fortuna, and I just kind of shotgunned it across what I thought were the best 12 explorers after talking to a couple of geologists. And I don't know, right now, they're all kind of like Fortuna, they're all down 70 to 80%. So it's not worked out well. I'm still up on my bullion purchases, so at least I have that. But yeah, I know
That's the
the
way
trade,
things
it's
work
it's
out with
been it's been quite the
explorers
pain trade,
sometimes.
Yeah.
Yeah.
So
And in terms of royalty companies, are you interested in any of the royalty plays? Like if wheat and precious were to continue to drop, would you be interested in accumulating a few of those?
no, I'm not that smart. I should be. That'd be a good one. No, I'd like to get into some of the royalty players, maybe after uranium takes off a bit. Um, Rebalance into some of those, Metalla, Wheat and Precious, Sandstorm. I do hold quite a bit, not a lot, but for me it's a bit of Origin,
Uh-huh.
which has a silver royalty on a First Majestic mine. And I think in a couple, oh gosh, less than a year now, they should be getting some pretty sweet cash flow from that. So yeah, there's good royalty plays, and most people probably buying just the precious metal bullion and probably just a basket of 5 or 6 miners. probably would be the best bet. I wanted to go out on the risk curve a bit, and I don't have any regrets, but it's been painful to watch for sure.
That's what the listeners want to know. We're all speculative commodity bulls
Yeah,
at heart. If I
yeah,
have to push you into the explorer camp for just a second,
sure.
who would be your number one pick in terms of explorers at this point in time?
Mm. My last purchase this last week was Sable. Um, I think they're mostly going after copper right now in Argentina. So that's an explorer, but it's not silver. Silver, probably the best bet's Reina. Silver. Um, uh, they've got several great properties, and they finally raised the money about this time last year to go after it. So they're going after several properties. They have Wigui and Batopias, and they also have one in Utah, I think. So
That
in
makes me
America.
feel slightly better about sitting on a decent drawdown at the moment in my Rainer shares. So disclosure, guys, I happen
Yeah.
to I happen to own this, but that's the game
Yeah.
of
No,
exploration.
they've got the best people, and they have some of the best properties, and they got them, kind of at the bottom. They've got a lot more exploration to go. If somebody had a Swiss account and could buy some of the Russian miners, they'd probably be doing pretty well. The dividends, I think, are like 50% or something stupid. So,
Yeah. I'm in a forced hold with my Polymetal shares. Uh,
same. Yeah.
Adriatic Metals, with development site in Bosnia, seems to be trading a decent discount to its
Yeah.
NPV. Are you interested in that at
Yeah.
all?
I had it. I had a lot of it, and it was very good to me. And when they started to go into the nasty part of the Lassonde curve, I sold. So, but yeah, if I get any free cash, that's going to be a good one. There's a couple others that are really beaten down. Integra in the United States is one. Adriatic, as you said. Really, even Fresnillo is very, very low and cheap, and even the banks like that one. So
And so
there's a lot of good ones.
the way that you played, are you looking to get that on that upside of the Lassonde curve, which for viewers, let's imagine you're an explorer and you find a
Mhm.
deposit and you're trying, as an investor or speculator, you're trying to find that sweet spot of just when that property is about to go into production, because you get this multiple re-rating. Instead of being valued as an explorer or a developer with pounds in the ground, people expect that those pounds are going to be out of the ground, and so you get valued as a producer. Are you looking to hold until they hit that and then sell, or are you happy to hold some of these into production and benefit from the ongoing future cash flows?
Uh, So the Lassonde curve is definitely proven, right? Um, I like it, but like Silvercrest just went into production, right? And they were one of the only companies I own in any commodity to stay under budget and on time. Like, hats off to them. Like, they have done really well. Um, but I didn't sell because, like there's no froth in the silver market. So I think the froth in the underlying commodity is more important for silver. And so, we start, silver's under $20 today, and just about at and a couple pennies above cost of production. So, when we start to get into 40 and people get excited about it, and get to 45 and people get it, oh, this is great. Yeah, we're going to 100. And we get to 60 and we're going to 150. Like, I'll probably just take some profits there.
Under trim.
So the Lassonde curve is very important, to know what you own and to know the value of what you own, as opposed to just the price. But the silver space is so small. I'm really going to go just based off of the froth in the silver market in general.
And with regards to the spot market, a lot of people don't understand the difference between the physical and the spot market. So the spot market may be trading at, call it $18, but if you go to buy a physical
Mhm.
silver coin or some bullion, it's often a very different story. You might be paying $30, $35. And so
Mhm.
explain to listeners how that comes about with the amount of paper leverage in the silver market. So you have, I've read something like 200 times the physical being traded in the paper markets. And when the banks are short, that obviously massively suppresses the price. But are
Right.
you
Yep.
expecting, with the banks now starting to go net long, that will lead to the paper price coming up?
Yes. Yes, I do think the paper price will come up. And yeah, the paper price, I mean, people can say it's not real, and they're mostly right, but the banks know that not, there's just not gonna be enough people call them on it by taking physical delivery. Um, I I know a lot of other family offices here in the United States and Canada that have taken physical delivery from the COMEX, and typically you get 70 to 90 cents an ounce premium on 5 of the 1,000-ounce bars. So you get it pretty cheaply. And so, it does cost a lot more to melt it down and mint it into sovereign coins, and sometimes those are a higher purity. But I think with the physical and the paper leverage, I think it had been probably as high as 200. I think it's only like 2.5 right now, maybe less.
Interesting.
It's at least twice. But I think right now they've really come down, partially because of Basel III accords, and then I think partially just because now it's a hated trade, and the dumb money's short. So I think so. Yeah, I think we see a lot of upside move, and will it happen before the elections? Probably not. Will it happen before Christmas? Maybe we see some relief and get back up to 24, 25, Um, but there's always that chance that it could break. Maybe it's a war, or maybe the Fed finally pivots, or who knows what the catalyst will be. I just know that I want to be long here, you know. Um, and if you have a multi-year time horizon and you understand the difference between price and value, like this is a great value. A lot of these companies, you're getting them for their assets and cash, and you're getting, you know, the exploration and the production facilities for free or at an incredible discount. So,
Yeah. There's massive
I think
optionality.
they'll kind of be like coal a year or two ago. Like nobody wanted coal, and they were paying nice dividends, and now they're paying really nice dividends. And same with a lot of the oil in Canada. I bought 2.5 years ago. Like every single one of them, even my dogs have tripled. So they paid me dividends.
It's
So
still
yeah,
trading at, double-digit free cash flow to enterprise value yields,
huge
a lot
cash
of
flow.
these
Yeah,
guys. Crazy.
yeah, yeah.
Very wise words. Well, it's ROI time, guys. This is the ROI
Okay.
segment specific to the channel where I get to ask Mr. Steve, what is your highest ROI from any investment to date? Tell us a little bit about that.
Probably learning a second language. Um, I would say, yeah. Uh,
Which language are you learning?
I learned Spanish when I was late teens, early 20s. So, yeah.
Excellent. And what has that allowed you to do that's been such a good return on invested time in this case?
So lots of time. Just being able to communicate with more people allowed me to travel and work in other countries, and like I've been to Peru, Ecuador, Honduras, Spain, a lot of other countries too. But been able to work and meet people, and I think really just getting to connect with people or patients here that I have that speak Spanish, that you know they can knock on 50 dental offices and they don't get to connect with their doctor, and it's kind of sad. And they'll often, sometimes they can bring a translator, sometimes they can't, but they love coming to see me and being able to be heard.
Yes.
So yeah, I mean, I've had some speculations like oh gosh, I had a 20 bagger, but that was total gambling in the crypto market. um, but I think for real return, you know uh, languages, critical thinking, a good book. I think
Absolutely.
that's probably higher.
Absolutely. I would tend to agree as a someone who loves to study languages, I would definitely agree with that. In terms of your highest conviction stock today, looking out into the future, and again, guys, just an opinion, just two guys speculating here. What would your highest conviction stock be? If I had to force you to say one name off the top of your head, what's it going to be and why?
That's tough. That's tough to narrow down all your favorites. It might be Global Atomic. It's a uranium company. Sovereign Metals is way up there. It's nearly tied.
Interesting.
The titanium and graphite, you know, and who knows when that pays off. But I'm happy to sit in it. So.
Okay, interesting. So Global Atomic, uranium developer in Niger.
Yep, correct.
Lots of different developers out there. A lot of people, all the hypes around the Namibian guys. What is it about Global Atomic that, I mean, a traditionally pretty risky jurisdiction? What is it that makes you attracted to, or what attracts you to Global Atomic?
Their margin is foolproof. Their, I think, gosh, they've worked really well to be in with the community and in with the government, and they've gotten permitted extremely fast, and they've already started building, and they've stayed ahead of inflation, and they have cash flow from their JV with Befesa in Turkey, the zinc producer. They've just managed risk so well, and they've completed everything they said they were going to do on ahead of time, and that's just so rare in the commodity space. I think the biggest thing though is the insider ownership. It's not just one guy. There's several guys. You know, the Roman family, of course, but there's several board of directors that they're buying almost every quarter. You know, and a lot of the big institutional shareholders, and like I mean, there's just the people that would know are buying more every dip.
So always something to be said when you're aligned with the management. And sovereign metals I've never heard of, and the titanium graphite trade. That's very interesting. Give us a little spiel on that before we wrap up.
So it's in Malawi, which people are probably a little bit less comfortable with. Great people. They need the jobs. It's actually they have a lot of they've got the energy lined out because they already have some solar and some geothermal, and I think maybe some hydropower to the plant. So their energy costs are pretty locked down. It is so the titanium ore that you're looking for is called rutile, and it's pure, and it doesn't need some crazy acid or base or chemical to pull it out. They just strip mine it in a big open pit, dump it, they wash it with water, and then it just filters out. And so it's completely clean. It's the most ESG friendly mining you could ever see, like just a little bit of water, and then they just put the dirt right back. Like there's no environmental harm. And this rutile is just, it's incredibly pure, and it's the only tier 1 deposit. And there's not even a tier 2 deposit. Like all the other deposits are dirty titanium that takes a lot of chemicals and electricity to refine, or they're super small and hard to get to. So this is the only tier 1 deposit for rutile, for titanium. And it also, in the same dirt, washed by the same method, is a ton of graphite. So I mean, like the IRR on this thing is just, it's going to be insane.
And what are the number one consumer or manufacturer demands for those metals? What are they used for?
Graphite, primarily batteries, which I think we see a lot more of as more and more people electrify. Graphite's used in a lot of things. Titanium, paint's a big one, and they're pretty picky about the purity. Industrial and defense, there's a lot of industrial things. Like if you want it to be strong but lightweight, you're going to use titanium, right? So like all the Tour de France bikes, titanium typically. Right. There's some graphite and carbon fiber, right? But or sometimes it's carbon fiber and titanium weaved, like in those bikes or in F1 cars. But there's a lot of airplanes that use a lot of titanium. And if we see more war, which I hope we don't, but if we do, you'll see a lot more titanium consumed. So
Yeah, sadly.
yeah. So
Well, that's
I
very
think
interesting.
just the defense angle alone probably sends it to several backers. So yeah.
Okay. Well, thank you so much for your input today. I learned a hell of a lot, and I'm
Thank
sure
you.
the audience did as well. Before we wrap up, is there anything I missed, anything I should have asked you that I didn't, or is there anything on your mind that you want to share with the listeners of the ROI channel?
No, I would just encourage people to stock up. Try to get probably 15 days of water and probably 6 months of food. Just make a pantry. Like you don't have to buy crazy dehydrated meals and go full prepper or whatever. But I think just having a little bit of extra, especially for our friends in Europe that might be listening to this,
Mm,
I think we could probably see some disruptions to your food supply chain. I think it gets tight the world over, but especially on people on the margins. And so if you can buy that now cheaply and maybe after you've made some money on the uranium trade or sovereign metals or silver or whatever, you can give back to maybe some poor people in Africa through compassion or whatever. So yeah,
very, very sensible, very wise words. Well, thank you so much, Steve. I'll have to get you back on in a couple of months to see what the state of the world is at that moment.
thanks.
Thank you very much, guys. Make sure that you get in touch or follow Steve. I'll have his Twitter handle in the description. And of course, make sure you're following Sow and Reap Capital on YouTube. The guys put out so much great content. That's all for today. I look forward to seeing you in another episode of the ROI channel shortly. God bless and take care, everyone. Bye.